Let's pivot to understanding the investment landscape and navigating the dynamics of investments in India's higher education sector. Anand Sudarshan, founder and director at Sylvant Advisors, will moderate this session, sharing insights into the Indian higher education market.
Good evening, everyone. We are about to unveil a report on higher education, a summary of that which you all would have received at the reception and the registration desk. I would like to call Sameer Bayal, my investment banking CEO, to come on the stage and unveil it. Anand? This is the 6th or the 7th edition on our publication on the education space. And this is the part A of the report. A part B of this report consists of more than 1,000 education institutions we have profiled and covered. And you will get the copy of the report if you all reach out to us. A soft copy we'll be more than happy to give it away to you. Right? Thank you, Sameer.
Good evening, everybody. It's 4 o'clock, so I should say good evening. Pleasure to be here amidst all of you. And the topic that's been given to us is about investments landscape, and we are going to dive straight into it. You know the panelists, so we won't spend any time on the introductions. But what I will do is to set a quick 1 or 2 minute background, and then we'll dive into this conversation today. Yeah, it's okay with all of you? Yeah. So, just look around the kind of topics that are there, and I'm not going to start with artificial intelligence for a change, right? So, look at the range of topics that's out there. Look at what's been happening. If there is a reality that hits us, it started well before that, but it certainly hits us post-pandemic. It's the fact that education worldwide has been for a while now. It's got accelerated rapidly during and especially post-pandemic, a transformation, a dramatic and significant transformation. Now, this transformation has been fueled by many things. We all talk a lot about technology, absolutely, no questions about it. Technology per se, artificial intelligence specifically now, very exciting world, but there are other factors in play as well. And the two other factors that I want to place in front of you and then open it out for conversations are these, right? For a very long time, starting possibly from an Indian perspective, starting possibly even pre-independence, mobility in education overseas was based on discovery. People traveled overseas to study so that they could discover what the interests are, they could discover what careers that they can set for themselves. And that resulted, and same thing true for students from many other countries, and all of this was predominantly mobility in one direction, from emerging markets to the West. Early days, we had people from Africa, for example, coming to India to study, so which is pretty much the same thing, but not so much as career as in terms of opportunities which did not exist there. Now, what is happening is increasingly with borders being more tightly shut and countries going through their own changes, aging population and so on and so forth, the questions have changed. Each country is now asking, what is it that I want, right? What is the outcome that I want? So it's outcome-based mobility. Depending on what UK wants, it crafts its policies, it crafts its visa policies and so on and so forth. And they are no longer just relying on the best universities to attract the top talent. They're going beyond that. And that will get accelerated by use of technology, because if you don't have to go to a country to study, still get the capability to be able to work there because that's where you seek your career. And that's the kind of career that the country requires. Then the nature of mobility itself is going to be changed forever. I'm just going to leave these two things on the table and then close it by just recounting the goals that are there in front of us. And I'm going to request Atul to start the conversation. What are the kind of GR goals that the government is talking about? And very specifically, if you can just outline quickly what the scenario is and how that translates itself into investment scenario in India.
So, Anand, government has a very ambitious goal of moving from 31% GER in higher education to 50%, but there is very limited on the roadmap. Now, if you see, over the last 2.5 decades, every year the GER has increased by 1.5%, give or take here or there, which simply means without any major drastic investment change by the government, which clearly means that it is the desire of the population to grow and do higher education. Having said that, investments in this segment have been probably 1/4 or 1/5 of K-12, probably because of various reasons that investors have believed in it, whether it is the LTV or whether it is, exit challenges. But the good news is that the relaxations on the regulation by the government have been started from the most complex sector. In fact, the medical education saw the first set of relaxations. And I think going down the line, there will be a lot more investment happening on the regulated side as well as the unregulated side. What is more important that investors as well as educators understand is how to sweat the current asset. Whether you are looking at it as a balance sheet or the P&L. If you look at the skill side of the business, it's a game of P&L. How much you spend on the tech, how much you spend on the OPEX. On the regulated side, it's the game of the balance sheet. And are you sweating your real estate appropriately? Mumbai is the best example for it. You have in the same premises probably 3 or 4 sessions being run, and the capacity is filled to the brim. But that's not the case in other geographies. And that is what probably educators need to learn also.
Okay, so great point, what you have made. But let me ask you, let me push this a little further. The anchor to this, according to you, is GER. To me, GER is a fairly meaningless TLA, 3-letter acronym, right? Because at the end of the day, bulk of the investments in education are not in the regulated sector. It's in the unregulated sector. So if you can very quickly in 30 seconds answer, 2 questions. Number one, if that's the case, what would be your advice, suggestion to investors? How should they look at the unregulated sector? And second, in parallel, if you were to look at the balancing side of it, which is regulated sector, seems to me that regulated sector has always required a lot of capital. Where do you think the whole thing is going to go? And there is a third element to the whole thing, which I'm going to hold for Mahesh to ask that question. Go ahead.
So, see, unregulated sector, you may start your investment in it. But if you want a business continuity, it is very important that you also have some bit of investments on the regulated side. And that probably answers your second question also, is to how to balance it. You cannot be sitting outside the fence and say, I'm doing only skills or I'm doing only coaching and I'm not on the other side. You may see cash flows.
But how are they going to do it? It's not fungible capital. Fungible capital is not fungible. How are they going to invest in the regulated sector?
Sir, there are structures through which they can. Over and above that, apart from looking at, as I said, it's a call you have to take whether it is P&L or balance sheet. And what is your duration? If you are going to be a 2-year horizon investor, then probably you might want to invest in the unregulated. But if you are here for long haul, then the returns on the regulated side will be far, far more, better versus the unregulated.
I'll be even more candid. I will say if you are going to be investing for 2 or 3 years, don't invest in education. This is a long haul game. If you don't have a 8 to 10 year mindset minimum, don't invest in education. And I can say that maybe you can't. But Mahesh, let me come to you now. If this is the change that's happening worldwide and he's quickly laid out, I want to ask you 2 questions. I'll start with the first one and I'll wait to ask the second, which is, what is the student perspective in all of this?
I think...
and if you can just focus in terms of what it means in, from an investment perspective, it will be useful.
Yeah. So I think for the last 2 decades, the student has been told to question the outcomes. All the ads that you see, all the grandiose claims that you see is about what the outcome that the university or the college was doing. And it can also be the unregulated segment, which is the coaching institutions, for example, right? Which I think do a lot of top farming, but that's besides the case, right? So the student today understands outcomes. Also, he or she also understands affordability of education. For example, you take, Atul was talking of medical education being the first unregulated segment, right? Or rather freedom in a certain sense, right? But it brought in a travesty to the education system completely. You actually have a student who's got 15 out of 100, which is 17% marks, getting a seat because the education, though it's free, is so unaffordable that anyone can get in. In NEET, in medical PG, a 0% student gets a seat. And you have 5 lakh students or 4 lakh students taking an exam for 30,000 seats, and still a 0% student gets a seat. In undergrad, a 10 lakh ranker gets a seat when there are only 1 lakh seats. So there is something wrong about it. When you free the system, it must be fair enough for, we talk of meritocracy, right? We talk of good doctors coming out, right? But when you free it, it should not mean the deep pockets take the cake, right? And the coaching segment is much to blame for that in a certain sense, because it's a lot of top, like if you look at any coaching claims, they say, I got the top 10 rankers and all. My question is, and I've been talking to many of the coaching companies of late, whatever you do, you have 100,000 seats and you have 3-4 million people chasing them. So whatever you do, there will be if you take medical, 1.9 million students will still be outside the system. You can always say, had you run faster, you would have been there, which means he would have been there, but someone else would have been behind. And that's how the entire ecosystem works, right? Now, what happens to the 1.9 million? Many of our unregulated stuff should be about how do we lead these people through a pathway where they get what they've been promised as an outcome. And for me, the outcome has always been a challenge, because most of the outcomes that I've talked about are question mark. Now, what are the opportunities for investment? If I were to come back to that, the latest document, of course it's a document, but some of the states, in my opinion, will implement that, their NEP. The micro-credentials, the academic bank of credits, they all give you a space to start creating, programs which have certain degree of recognizability, a credit system, and those things can be banked at some point in time, because even the universities can talk of 50% being outside the system, right? So yeah, you're asking a question.
Yeah. So I'm hearing 2 things from you. I'm hearing that there is a fairness problem. 0% gets a seat, and there is a big disparity there. And I'm also hearing you say, one small little part, but a significant part of NEP is this whole question of academic bank of credits and micro-credentials. And you feel that maybe that's a way by which you can build on something which is tangible.
See, you talked of the convergence between the formal education versus the informal education, right? If companies here can actually use the micro-credential system and start creating those micro-credits which can plug into the formal education system, then you have a model going there. And the formal education cannot obviously create every possible course, right? We talk about liberal education, which means a school in Bharatanatyam can actually create a credit for 30 credit points and still plug it into a system which is formal education and still go through that route.
We'll all dance to a different tune altogether then.
Absolutely, but that's a possibility. I only gave an extreme case, but I'm saying that, there are children who want to study philosophy and economics or something, and the college might not give that. And that's a possibility. So for me, micro-credentials and the academic bank of credits, if you can use them properly to create courses which can plug into a formal education system, then you have something going, because this 30 to 50 GR, I agree that GR is a big thing, but still when you create scale, there is still some quality that still comes in. It may not be completely wasted in a certain sense. The 30 to 50 doesn't mean that all the 20 is bad. Maybe 5 would be good and 15 might be bad, but that's how any evolving system will deal with it.
So I'm hearing you say, use the NEP constructively to be able to produce solutions that can directly link the formal system and the unregulated system.
Absolutely.
To the students' benefit.
And one more thing which I've been passionately talking about, I'm sorry. See, never live on the inefficiency or the lethargy of the government system to create a business model for yourself. That will kill you. Like, for example, the same skilling, I come to it and I wrote about it also. You say the student studies for 19 years, and then you come back saying, listen, if you take my 3-month skilling program, you'll be employable, which means till 19 years he or she was unemployable. That's the assumption. Don't tell me this 3-month magic potion cannot be inbuilt into the 19-year education system. And the day the government removes its lethargy and builds that in, then what happens to the companies that you created? So don't create a business proposition based on the inefficiency or lethargy of its system.
Actually, the problem is the entire formal education system, at least the so-called quote-unquote professional system, is based on the push model, where the course structure is determined by regulators and the whole thing is pushed down. While the unregulated market is based on the pull model, which is either by demand pull because of employment or demand pull because shortage number of seats and a lot of people wanting to get in. And this is an inherent disparity that needs to be fixed. But let me rush from there given the paucity of time. And I'll come back to you. I have another very interesting question to ask you. But before that, Aarushi, let me ask you this. So you've heard the investments, very briefly the investments landscape. You heard the student perspective from Mahesh. What do you think the regulatory system is looking like? I know NEP, everybody talks NEP. That's another TLA to me. Everybody talks, NEP. NEP is more a direction, as I was mentioning earlier. It's not a directive. India has a concurrent structure as far as education is concerned, and this is to be kept in mind from a regulation perspective. Can you speak about the investment side specifically on the regulated sector and regulations per se, how they can actually be used to benefit and accelerate the sector?
Sure. So I'm going to split it into 3 parts. Let me first start explaining what the NEP is. So NEP, I know everybody speaks about, like you said, but it's a vision statement. It's a policy statement of the government. The central government's released it. It's for the states. In India, it's a concurrent list subject. Education, both the center and the states legislate. Now, there are states which say, oh, I really like NEP, I'm going to implement it. But there are also states which said, I don't want to implement it, or maybe I'll come up with my own version of the NEP. That is a choice that the Constitution guarantees. Having said that, I think it is important to highlight that there are certain good things that the NEP has done for the country, especially for the higher education segment. There were a lot of things that the NEP has spoken about in addition to the gross enrollment ratios, etc. They said, we'll make life easier, more autonomy for higher education institutions and universities in India. We've seen that happening. Regulations are changing. Recent example was, deemed university regulation. They allowed distinct category, de novo institutions can come up. Regulatory framework is very thin, apply online and the like. Now, how the process really happens, one is to see, but there's an effort being made. Similarly, when you say more autonomy to be given to the universities, there's an effort being made. There are also these directives that are coming from the UGC. Please try and see if you can do, dual degree program, one online, one offline, maybe hybrid, maybe both online. And to that extent, there are online degree programs that universities in India can offer. Just moving from the foreign university circuit, foreign universities in India, that has been a bone of contention for the longest that I can remember. But GIFT allowed it. And after GIFT, when we saw announcements of Deakin, etc., as of November, foreign universities have been permitted to set up campus anywhere in the country. Again, the regulatory framework is very, very light touch. It doesn't go into the details and the nuances. It requires you to maintain control standards, be of a premium quality. You apply, they will evaluate, and they'll let you go through the process. So to that extent, I feel that the whatever NEP had kind of envisioned, the government's been acting on it. The success of it and is the implementation part that I think both as industry and government, they need to work together and do it. And just to answer your question on the investment piece, I think with each regulation, you have a business model and you have a scope for investment, just like Maheshwer was saying, right? You have micro-credentials. Now you can come up with businesses. Now, NEP has been speaking about the fact that we need to have vocational education. Don't focus on set curriculums. So that's where your business opportunity is. In the context of foreign university regulation, the regulation says that they don't say that you need to be a not-for-profit in nature. There's an option. You want to be a for-profit, the regulations don't say no. They say you can have a joint venture with an Indian partner, which could be a higher education institute in India, or it could be a private limited company. That's the opportunity. But you need to have controls of the foreign university, because obviously it's their degree and curriculum. That's another business opportunity. So I think every time we look at regulation, we should not look at regulation because it's a law being created. Every law comes with its own set of challenges, but it also opens a lot of business and investment opportunities.
All right. I grant you that NEP is a very, very hopeful document. I've been in this for a very long time. I have seen earlier attempts at many different things, including trying to set up a NRI university, PIO university, to all kinds of different things. NEP, for example, talks about a single regulator. And for the last 20 years, I've been having conversations, and very serious conversations at that, about the single regulators, including committees which Planning Commission had set up. I don't know whether you know something called Planning Commission. Yeah. It used to be there. So even from that time, this has been going on. I'm very happy that the interest is not died, but I would really like to see that getting translated. But I'm particularly happy to see the movement as far as foreign universities go. And that is an easy part. You can make those announcements. It's going to take a while for the foreign universities to figure out the math and actually come to India. But at least it signals the intent very loudly and very, very decisively. So let's hope that it moves on. But just one very, very quickly, 30 seconds on. How is this going to work in a concurrent model of legislation that is there in India for education? I mean, all of this is fine. These are all announcements. NEPs, like I said, it's a direction. Others are announcement. How is it actually going to help?
So see, for example, GIFT is simple, right? Because they have a different regulator, which is the IFSCA. And they are not coming under the regulatory framework of the UGC or the state governments. They are a single regulator. So it's simpler there. But when you look at India as a whole, unless the center and the state work hand in hand, if a foreign university is going to come and it makes an application to the UGC, which is the regulator, the UGC also needs to facilitate the state level processing, because otherwise you might just get stuck at the state level. So it's a real question. That's
a real question. And I think the GIFT regulatory, the outside regulation structure of GIFT is also honestly very limited, very, very limited, I would say. And we need to go beyond that. But let's hope that that's the first step, and many more things will happen. I'm going to come to Mahesh first, and then I'm going to come back to you again. Mahesh, I said I'll come back to you on a single question. Now, we talked about Atul. I'm going to go back to Atul on questions relating to investments. But he talked about two kinds of investment. There is a third which has never been discussed much. Actually, there are two parts to the third, never been discussed much, and I want you to just opine on them very quickly. One, from a funding perspective, why should government fund institutions? Why can't they keep their entire funding to students directly? So that's my first question, because that's going to bring a lot of fiscal discipline to institutions, because if they get the same amount of fees from every student, some of them covered through scholarships from the government, their own accountability will have to go up. So that's question number one. The second one is, one of the ways by which you have seen, in the US university, for example, student fees account for a public university is as low as below 10%, to a private university in the 20, 25, 27% range. Rest of it comes from other areas, including contributions from others, endowment contribution, concessions, and so on and so forth. When do you expect a model like this to happen? Again, request you to keep it very sharp given the paucity of time, but two quick answers, and I'm going to come back to you. I'll continue on this vein with you, Atul.
So the first question about this for government funding the student instead of the university directly. See, across the board, if you see, you have public institutions, public aided private institutions, and private institutions, right? The public institutions are owned by the government, and they deserve to be funded by the government. See, I don't think we should keep looking at the US for the kind of issues that we have in India. We talk of demographic dividend, and dividend comes when you invest. India is one of the lowest investment countries in terms of the government spending money on education, and we talk of demographic dividend. You go and talk to any parent in this August room, a middle-class family will spend 15-20% on children's education. The moment the same man becomes a minister, he spends 3%, because they're not his children. That's the problem. So never question, for a country like India, please don't question why the government should fund. I would much rather say how the funding would happen is a separate issue altogether. You look at, and two, we talk of affordability of education, right? I'm sorry I'm diverging about the whole thing. KV students, right? The best education that you have, the best result that they have, the government spends 27,000 rupees per student. The same CBSE syllabus goes somewhere else and they charge 3 lakh rupees per student. So affordability is to do with how you tight fist the whole thing and make it affordable for people so that merit comes in. Right. So for me, at this point in time, the reason why government is funding is because you have three kinds of institutions: private, public, and public aided. And public aided has a part of it, public completely, and private is not funded at all. All these institutions of eminence, the government doesn't give a penny to them. Doesn't give a penny to them, right? So that's the first part. What's the second question you said? I'm sorry.
I was talking in terms of why don't Indians contribute to endowment?
That's a long way off. That's a long way off because I think the giving back nature hasn't really, that bug hasn't caught on, but I think I see that happening over the last few years where people want to be seen to be giving back and all. I think we need to give it some space because the universities that we're talking about, Anand, outside, is 300, 200 years old. They have alumni networks which are very, very old. People, when they pass away, bequeath their entire inheritance to the university. It's slightly further away for us.
Yeah. It is further away, and I don't fully buy the US is old, 450 years old, Harvard, etc. But Australia, for example, it's much younger, and even they have begun to have a history of endowment.
Yeah,
for example,
I think we will.
Endowment.
I'm hoping that we'll reach there. Like I've seen the IITs going there very quickly.
We are proud. In the morning when you heard, if you heard Mr. Amitabh Kant spoke very well, talked about so many unicorns. I'd like to see so many unicorns giving so much of their wealth to universities in India. That would be the day. But anyway, we'll park it. It's an aspirational conversation for another day. I'm going to take it on from there, Atul. So here is the question for you, right? Now, based on the thesis, what Mahesh just now said, I'm going to put something in front of you. So thesis is when you want to grow GER, you have to build capacity ahead of capability, capacity ahead of even demand. That's the message that I'm hearing. It's my interpretation, but that's what I'm hearing from it. Now, you're going to put capacity ahead of capability building and capacity ahead, which is capacity as defined by physical infrastructure. That's straight away investment. Where is that investment going to come from?
So, Anand, before I answer this question, I would just want to add on your previous question which you asked, Mahesh. See, apart from endowment, West also receives, universities also receive money on the R&D spend that they have done and the IP that they leverage. In India, currently the universities spend probably 1/4 or 1/3 of what the West would be spending on the R&D side. As the economy grows and we spend on that, there will be that, recurring income which will start flowing. And there will be a lot of investment that will flow into the universities to do specific R&Ds. In fact, the IITs do receive money for that. So, I'll leave to that. Now, answering on your capacity versus capability, I believe that the hard infrastructure capacity is there, actually. If you are doing 31% GER in the single shift, even if 40% of them convert into a double shift and those institutions are good enough, you have adequate capacity, and that itself will give you adequate ROI. So you don't need to go out and build and spend so much on the capex. You need to look at it, how to streamline it, how to monetize on it.
Perversely,
I'll just add one thing, Anand, for what he's saying, capacity we're talking of, right? Of the about 1,500 KV schools that you have, 85 have 2 shifts.
I'm sorry?
Of the 1,500 plus KV schools, KV Kendriya Vidyalayas you have, 85 have 2 shifts. And they work out very, very well. The result there is better than the other 1,400. What I'm trying to say is, and in Bombay, colleges offer morning and evening shifts, right? This thing of how do we use our infra for greater efficiency is proven at the school system, at the higher education system, at the skilling system, and at a adult education system.
And it is not adopted widely across the country, which is such a pity. And that's what I was going to come to, Atul. Perversely, it's much easier for a university to borrow money, which in other words is seek investments, to build a new building, than it is for it to get some money so that it can run 2 shifts or 3 shifts. Very perverse. Your idea, and Mahesh is supporting it fully, it's absolutely bang on, but unfortunately that's what the situation now really looks like. But let me ask you another question, to be able to facilitate higher levels of investments, going beyond investments from non-dilutive financing or debt or that kind of stuff, you really have to have capital flow, equity capital flow of some kind or the other. You did mention that there are new structures that are emerging. How long do you think they are going to take before they become respectable? I'm using that word very carefully. Respectable, acceptable, and regulatorily easy before it's a reality.
See, for investment in higher education, there are two parts. The government is nowhere saying that a private player cannot invest on the for-profit side. Government is saying that you have to run it on a not-for-profit side. In fact, there are players, listed players on the exchanges who have universities where they have created structures, they have raised money from the market and are running it successfully, profitably. It is about this entire stuff is more about media perception, our perception, what is acceptable, what is not acceptable. Otherwise, if you look at it on ground, do we really think that the government doesn't know what are the structures and how it is functioning? So there is enough ample room available for you to raise equity money. It is about the call that the investor has to take, whether they are comfortable with the regulations and the structures that are available or not. And there are, as I'm saying, there are examples of listed companies who have shown related party transactions with the trust or the not-for-profit entity.
Absolutely agree with you. Just a quick add-on question to you again, Atul, on that. We haven't touched upon non-regulated, education and investments thereof. And you've seen the carnage on investments, equity investments in particular, over the last few years on EdTech. Now, some would say that should put investors off EdTech for a while to come. I would say it tells people that don't go, everybody don't go chasing after one model and start distilling before you make the investment. So actually it's a good thing. What do you think?
Sir, the premise of education, you have to look at it not from the macro numbers, and this will be contrary to our report that we just released. The report is a lot more on macro numbers, but you have to bet on the entrepreneur and the educator. It's a business which is a grounds of business where brands very rarely travel, and it's very far more difficult to remember. How much are you going to invest on that is a call which the investor has to take. And secondly is that are they going to chase on the valuation and the FOMO factor, or are they going to stick to the basics? That is what is more important. There will be a lot many more rounds or cycles where the sector will see its own highs and lows. You have to decide whether you are going to get caught into that cycle or not.
Adil se majboor, yeah, what to do? Everybody will chase valuation so long as it exists, but very, very good points that you've made. Aarushi, I'm going to come to you. My question to you is, we talked so much about regulation, and Atul was very clear that you can have a for-profit structure, etc., etc. So my question to you is this. There is an intent with which a not-for-profit structure has been insisted upon from 1956 when the first education policy was written. That intent gets supplanted, removed, replaced when you have a for-profit structure. That intent is based on the principle that a not-for-profit structure means that there is a moral commitment. I'm using again phrase very carefully, it's got nothing to do with law, but I make it using that education will be done in such a fashion or delivered in such a fashion that there is fairness all around, particularly to the student, more than anybody else. How do you think that's going to work with for-profit education? Is the current structure in not-for-profit is the best structure, or some for-profit do you think is going to give a better structure? Where is the issue, if there is an issue?
My personal view, and I have been a proponent of it for a while now, that education, like any other sector, should also now have an option of a for-profit structure. And I have various reasons to say so. At the juncture when we started with a not-for-profit structure setup, we were in a very different era of sorts. Education was sparse, you didn't have enough resources, enough universities. Also, people weren't really getting educated. So there was a moral obligation, to use your words, that the government has to provide education, and then whoever is also helping the government provides education should not profiteer out of it. Since then, I think there has been a very, very big shift in the way we look at education, right from the grassroots level where we have RT acts, which are providing free education to children of economically weaker sections, to certain laws, for example, against capitation fee, against profiteering. Fee regulations laws have also kicked in. Now, if these kind of structures are there, there are also a lot of reporting requirements that are there under various state regulations that universities have. You have to file annual returns and all. Now, whether that is kosher or not, again, I don't think that's what I can comment on, because I don't see that implementation part. But from where I see it is that if you have a not-for-profit structure, from an investor lens, it becomes a difficult structure, and that's why we have to create structures around it so that investments can work. The moment I put money into a not-for-profit structure, I can't take out money because it's technically donation, right? So I'm going to use it only for that purpose. But when I'm putting money for investment, there's a return that I expect. Now, instead of going from bank to bank, looking at borrowings, looking at collaterals where banks may agree, not agree, why not give that as an option? You're giving foreign universities that option. So why not give Indian universities also that option, and put them under the REMS, put them under tight regulations, put them under disclosures if you like to. Make it kosher. I don't think, like any other business, it's also going to be an issue, but just make it easy to raise money so that they can do better with their infrastructure.
Completely agree with you. I think a level playing field has never more meaning than this. You can't ask the for-profit structure to be made available to foreign universities and not being made available, but you have to do it with caution. I think the key point here is transparency. I think the issue with education, in at least in the present scheme of things, the transparency is nowhere near adequate. I won't even give 20%, 30% level of adequacy of transparency at this point in time. But that's my view. We have 5 minutes left. Very quickly, minute each, and then the last 2 minutes you will use to sum up. For you to have your last thoughts. Mahesh, why don't you start?
So for me, I'll come back to what the opportunities are, because that's very important for the audience sitting here. One is, I think you need to start looking at the regulatory environment and see the opportunities within that. And for me, micro-credentials, academic bank of credits, and all those things give a very good space. The second thing is, I think India would always be short in good quality supply, the way we are structured, right? And short in affordable supply. For example, last NSSO numbers, 40 million students did not go through education because they found education unaffordable, which means they could not afford education. That's an opportunity. You want to create an opportunity, deal with it. There are 40 million people, that's as good as the country, right? So deal with that. And you will make an impact, you will make a difference, and you will also make a profit out of that. And two, because there is shortage of quality supply, how do you, like the 5% students get into the IITs, NITs, great universities around the country, how do you handhold those other 95% students to take them to the right path? Internationally, you have counselors dealing with all those things. In India, doesn't have that at all. So there's a great opportunity to deal with the 95% and showing them the right pathway. Treat it that I'm selling myself, but that's what it is. So counseling, the micro-credentials, and dealing with affordable education. These are three things for me.
Fair enough. Thank you. Aarushi, your thoughts?
So I'm going to deal with it in the context of EdTech and the regulated sector. Regulated sector, we've all spoken about. There are structures and we are propagants of various structures. But when it comes to EdTech, it has had its ups and downs. But if the EdTech is also based on a business model which is somewhat regulatory compliant, today we don't have a education regulation for EdTech per se, but there are various regulations which talk about what the universities can do, what you can do with the universities, what you should be doing. There are consumer protection laws, etc. I think it's governance and compliance with regulations and formulating your model around it and ultimately solving a problem. So I think there still is an opportunity, and it's a great opportunity for higher education overall in general. I don't think we have any dearth of opportunity.
Fair enough.
So that's just how you use the time and opportunity and money on the table.
Okay. Atul, last word for you. What is it you think investors should be expecting from entities that they would like to make investments in for them to decide on investing? Keep the financial valuation, multiple, all that aside. What is it that you think they should expect?
See, when you invest in a company which is in FMCG, for example, you look at it whether the product is best in the breed or not, and whether they are competing in the market or not. When investors actually look at investing in education, they spend limited time on the quality of education by the institution. They look at the financials, they look at the balance sheet. You need to look at the product more, spend more due diligence, do that, and be ready to sit with your investee company for a long haul before expecting an exit. You can't come and say, I want an exit in 18 months. Just a couple of more points is that, we have seen regulations in education across 30 countries, and that's part of our report which is there in your kit. Every country has regulations in education, and every country survives and grows. So I don't think we are supposed to make a UN cry out of it. Second, if you look at healthcare as a sector, 20 years ago was highly regulated and has opened up. This segment will also open up. So I'm quite hopeful on both these things.
So you heard, all of you. I will just add one plug to all of this, I think, which has not been explicitly mentioned, but I think Mahesh, Aarushi, and Atul in the last segment addressed that, which is governance. I think one of the big issues with education, and we were just chatting with some people at lunchtime about very highly respected IT industry veteran investing personal money into building an institution which unfortunately, because of lack of governance, not any wrong intention, but just did not build the governance infrastructure that was required, is unfortunately today languishing. I think in addition to all of this, as investors, I would only say, please look for, seek, and ensure very strong governance and be there for the long haul. Thank you very much. Appreciate it.
One last thing I'll just say. Please, when you have two, presentations coming in, one talking about student outcomes, the other one talking about business outcomes. In education, please deal with or invest in companies which talk of student outcomes. That's far better for you guys.
That's a plug-in for you, student outcomes. Thank you very much. You all have a good evening.